Sorry, I was muted. Happy Tuesday, everybody. Sorry for you guys that are going to catch the replay where I just screamed in your ear a little bit. Um, as we're getting towards the end of the year, I want to make sure that these live streams not only are things that I know will be beneficial for you, but things that are top of mind for you right now. So I put out a call on LinkedIn, Facebook, and I said, hey, on the live stream tomorrow, what do you want me to talk about? And I got a few requests. Some of them were talking about protecting your client's data, outsourcing tax preparation. And while those are good, and I may actually cover those in articles for the paid subscription, um, since I'm working mostly with enrolled agents and we're doing tax representation and protecting people from tax debt, I wanted to do something still on topic with that. And a fellow accountant last night on Facebook made a post about requesting somebody's tax transcripts before you get married. And I reposted it and I started a conversation with another fellow accountant, a CPA. And it was crazy because they said that they had a vision about interviewing me, asking me, um, uh, I'm paraphrasing here, but asking me like the financial questions that you should ask somebody before you get married. And she was like, should you marry somebody that owes the IRS $100,000 or more? I have my own personal opinion about that. But that is how we got to today's topic. So, today, what we're talking about is how to protect your client when their spouse owes the IRS. All right. So, there are three different things I'm going to cover today. And before I get into that, because I don't think I have anybody on with me yet, I do want to make sure that I get some announcements in. I'm going to check in with LinkedIn because those are my faithful people, even though they've been having trouble commenting. Let me see if the live stream is up yet. All right, awesome. And I hear myself. So if you're on LinkedIn right now, make sure that you give StreamYard permission to show your name so I can see your comments and I can interact with you on here. If you're hopping in on Facebook, make sure you drop in and say hey in the comments. Catching this on the replay, YouTube, you say hey too. All right. So, as far as announcements are concerned, if you would like some accountability, the weekly accountability, which I have within my community, with the podcast on Monday and every Wednesday, we have an article as well. Um, I think that when explaining this, I haven't been able to explain it well just because I already know what it is. So let me go into that in a little detail right now. With the podcast, it is essentially a 10 to 20, I said 15, but they end up being 20, 25 minutes sometimes, coaching session with me on whatever the topic is of the week. So if you were to join right now, you have 13 of those sessions with me giving you instruction on how to do the thing. So we've talked about marketing, getting clients. I've done one video within the community on how to fill out the form 433, how to go through and determine what you need to actually take a look at before figuring out what your client qualifies for with the IRS, whether that's going to be a partial pay installment agreement, currently not collectible, bankruptcy. I walk you through those things, right? But also in establishing your firm and like, how do you qualify leads? How do you qualify prospects to know that you even want them to be a lead to become a prospect, right? So I walk you through those processes. And then in the article, that's where I go into even more detail. And at the end of every article, there's a section called Now It's Your Turn. So you get homework each week in addition to that coaching, in addition to the articles. So if you need to go back and read to see how to do something, you get homework of steps to actually implement in your practice to make sure that you are establishing boundaries. There's an engagement letter template. So make sure that you have a template for your tax representation clients as you bring them in. We're going to be talking about workflow. We have talked about, um, like I said, qualifying leads, preparing for that first consultation. We did a contest. No, I think it was a challenge. It might have just been whoever responded first, but they actually got to practice doing those intake calls with me live, right? And then we have those recordings in the group. So that's part of what you get in the tax representation journey. In addition to that, within the community, you also have unlimited access to me, and you also have peers as well. So other enrolled agents, aspiring enrolled agents, to give you that accountability and support. All right, so that's announcement one. If you are filing taxes right now and you still have business taxes to get done, the last date for that for this year is December 26th. So you want to make sure you get those in. Otherwise, you have to wait until January when the IRS e filing system wakes back up. And I think, last but not least, if you were looking to get a Christmas gift for your favorite EA, I have on my brew and sip coffee shirt today. Um, my favorite coffee shop, hands down. If you want to get me a gift card, that would be awesome. It's a small thank you for doing things like this. And the reason I bring that up is because some people have given stars or they'll send me like a cash app or something. So I did actually have somebody ask me what they could get me. Brew and Sip Coffee Bar gift cards are always acceptable. All right. So let me get right into the topic. I'm not going to be here too long because I don't believe I have anybody with me on Facebook, and LinkedIn is kind of glitchy right now. So I'm going to get right down to business. All right. So when we are looking at how to protect your client, we have three different options, as I mentioned earlier. It depends on the type of debt that the client's spouse has. What do I mean by that? So, if we are looking at someone, and sorry, I have notes here, so I stay on topic. If we are looking at someone whose spouse, yes, they have IRS debt, but maybe they have student loan or some other kind of government debt, going forward, if they file together and they aren't accumulating tax debt themselves, we can look at what is called injured spouse. All right. So, in case you don't know, let's say your client, the taxpayer, they have tax debt for 2022, right? This is the only year they've ever owed, but you help them set up an arrangement. They're making payments on that. It's going to be all good. Well, when they go to file in 2023, if they are due a refund for 2023, the IRS is going to be like, that's our money. And they're going to take that refund and apply it to the past debt. So if we have a similar scenario, let's say the couple just got married in 2023, all right? And when they filed separately their 2022 returns, the husband, yes, I'm putting on the husband today, the husband owes taxes, the wife does not. Because they weren't married, this is not a joint liability. It's only the husband's, right? Well, when they get married and they go to file together for their 2023 tax return, because now the two have become one, what the IRS is still going to do is take that 2023 refund and apply it to the husband's 2022 debt. That's where you can step in as the expert. And if they do wish to file together still because they're married, and depending on their income bracket, there may be a few benefits to them filing jointly. We can come to them and say, hey, you have the option of letting the IRS take this refund, apply it to the debt, and getting that over with quicker. But if the wife is like, no, I want my portion of the refund, I didn't get in trouble with those jokers, then we can look at injured spouse relief, which we can do with Form 8379. Yes, I always get the form numbers confused. With the 8379, what we'll do is allocate the income, what has been withheld from income, right? And then we'll allocate the different credits and deductions. So, for example, if we have the standard deduction, we are going to allocate that between them depending on how much income they have. right? Um, Same thing with the credits. Unless it's a credit on the form, you can decide how to do the allocations. But let's say it's a credit that was like, I don't know, bad example. Let's go back to the deductions. Let's look at the student loan interest deduction. All right. If that is her student loan interest, we can allocate the full thing to her. If it's his student loan interest, we can allocate the full thing to him. But what happens after that allocation, we see how much of the refund that would have gone to them is actually hers. And then that way we can use that to protect her refund. So she'll still get her refund, and only his portion of the refund will go to the debt. Okay. So that is one way. And there are certain criteria as to how long you have to do that. So I believe it's 3 years after the original return was filed. So let's say that you didn't know about that form for 2022 and you had a client in that situation. You can still go back and file the injured spouse form to help her get her portion of the refund back. Now, it's not going to happen quickly and be processed within the 3 weeks like a tax return typically is. So you need to make sure that your client is aware of that. For more details on the injured spouse form, I do have on the Tax Relief with Timbaland Bowens podcast an episode that deals completely, like, all I talk about is injured spouse relief. And I give a few more scenarios in addition to the form numbers, and in the show notes, it'll take you directly to the form and everything. So you can find that wherever you stream podcast, or you can go to my YouTube channel and check it out there. So the next thing that we have potentially, if your client qualifies, is innocent spouse relief. Sorry, I'm checking over here on LinkedIn to see if I got any people with me over there. So, with innocent spouse relief, that is a completely different ball game. That is essentially the spouse, one spouse saying, "Hey, we have fraudulent information on our return, and I don't want to go down in flames with my spouse when the IRS catches on to this." I'll use a wife example this time. All right. Let's say the wife is the one that primarily is in charge of handling the tax return. The husband has signed off on it, but when he's looking at it, he's like, hey, some of this stuff is kind of funky. For example, they don't have any dependents. The wife has that they have 2 children on there, right? The husband knows that his wife had a side business that made around $30,000. None of that income is on the return. Or she has the income, but she has deductions that he knows she did not qualify for on the return. When this happens, the taxpayer can look at filing Form 8857. I said the taxpayer. You can look at filing Form 8857 for your client on their behalf to claim innocent spouse relief. Now, what this does, any extra tax that is assessed as a result of these improper deductions, improper credits, income that wasn't reported, will not be attached to them. All right. But here's the thing, because essentially, if you're going to the IRS and saying, hey, my spouse lied on their return, or my ex spouse, which is often the case that I've seen, the IRS, it's not that they don't take your word for it, but they are going to give your spouse or ex spouse the opportunity to defend themselves, right? So once Form 8857 is submitted and the IRS reviews it, they are going to contact the taxpayer's spouse or ex spouse to get their side of the story. All right. And it can take up to 8 months for the IRS to come back with their decision. So, again, this is something that, if it is in fact true that their spouse filed a fraudulent return, they most definitely want to get themselves in the clear and don't want to get hit with the penalties. But this is not a form that should be filed like in retaliation, right? Because if you are married, you know that, let's say, like with family, you tell your family member something, you will forgive, forget, you and your spouse will be good again, but your family members don't forget. You file this form with the IRS, You may no longer be upset with your spouse or ex-spouse, but in that 8-month time frame, the IRS isn't going to forget, and they're going to be looking deeper into things because now you've just given them a flashlight to say, hey, they typically claim this type of stuff on their return when they shouldn't. All right. So that is our second thing. The third thing to protect your client when their spouse owes, you can advise them to just not file with their spouse at all. And here's why. When two people file together that are married, they are jointly liable for any tax debt. So even if we have, let's say one spouse works outside of the home for earned income and the other spouse is a homemaker, right? They take care of the home, they take care of the children, all of that stuff. A very unappreciated job often, but it typically doesn't make money, right? If the spouse that is earning income and the spouse that is the homemaker, they file together, if there is a liability, the homemaker spouse is just as liable for the tax debt as the spouse that earns the income. It doesn't seem fair, but that's the way it is. Because think of it this way, even though that homemaker is not bringing in additional income, the spouses are still able to take advantage of the homemaker's tax deduction. If the homemaker has any student loan interest and they're paying it, they're still going to be able to take advantage of that. So, just the same way they can take advantage of the actual tax benefits, they have to own the tax debt. So, for me, when I consult married couples and they have to make this decision, I like to lay it all out before them because here's the thing, if you're in a partnership within this marriage and all of the money is going in the same pot, all the money is going towards the same bills, then in some situations it is going to make sense for you to go ahead and still file as married filing jointly because those refunds are going to go towards knocking a bigger chunk out of the debt, right? But hopefully they know their spouse. On the flip side of that, if they know that their spouse hasn't adjusted any type of withholding, they're not making estimated tax payments, they basically haven't cleaned up their act. So instead of having refunds, they just have more and more debt accumulating. So now we have the snowball effect where $10,000 worth of debt has now turned into six figures worth of tax debt. In that scenario, that is something where you have to be honest with your clients and say, this is something that could potentially happen. I need to know how you all would like to proceed, right? So when we look at the three options that we have, one, we can look at injured spouse relief if one of the spouses is not actually liable for the tax debt and going forward, they're going to be getting refunds, right? Number two, we have the innocent spouse relief where one spouse has done fraudulent stuff on the tax return. This could be deductions they didn't qualify for, credits they didn't qualify for, leaving off income, making up income, right? Which some people do when they're trying to get a loan or a mortgage for a home, anything like that where they don't want to get hit with any additional penalties. For example, the accuracy related penalty, which can be 20% of the income that wasn't reported. There are going to be hefty penalties when the IRS finds things that significantly reduced a taxpayer's income. All right. And if your client knows that their spouse has been involved in that, the innocent spouse form is going to be the best option for them to avoid those additional penalties. And last but not least, the third way that you can protect your client is to advise them to not file with their spouse until the tax debt is actually taken care of. All right. Now, LinkedIn is saying try again. I do not see any comments here on Facebook. So I'm going to go ahead and hop off. If you are interested in the Tax Pros representation journey, I've left a link in the comments on Facebook. I will also do the same on LinkedIn. But in addition to that, if you want more information on injured spouse relief, I do have an article with innocent spouse versus injured spouse relief that is in the free subscription on americasfavoritea.com. And like I mentioned earlier, with the injured spouse relief, I do also have an innocent spouse relief podcast episode as well on the tax relief with Timlin Bowen's podcast. Now, I know this topic was targeted towards tax professionals and helping their clients that are facing these issues. However, if you're a taxpayer that's facing this issue right now and you need help with injured spouse relief or innocent spouse relief, you can book a call with me at bowenstaxsolutions.com and we will have a 1 hour call. This is a paid consultation, and I'll walk you through the process of what needs to be done to make sure that you actually qualify for innocent spouse relief or injured spouse relief, and what the next steps would be to make sure that you get those forms filed and you can see that relief. All right. Well, I don't have any questions, so I'm going to hop off. You all have a wonderful Tuesday, and I will see you next week.